Welcome back to Trendlines over Headlines, the show where we break down the markets with some of the best traders and analysts out there. My name is Patrick Dunawilla. I'm the editor of the Chart Report, and I'll be your host. We've got an awesome guest for you today. Matthew Tuttle is going to be joining us. Matthew is the founder and CEO of Tuttle Capital Management. He's known for creating the Inverse Cathie ETF, SARK, and the Inverse Jim Cramer ETF, SJIM. So it's going to be a fun conversation. You're not going to want to miss it. But before we talk to Matt, it's Friday. The markets are closed. So let's take a quick look at how this week played out. Hey guys, thanks for watching. Just a quick reminder, be sure to click like and subscribe so we can continue bringing you awesome content. Thanks. The S&P 500 closed out the day, the week, the month, and the quarter today with gains across all time frames. It rose about 3.5% on the week, marking its third straight weekly gain. Taking a look at the other major indices, they all rose around 3% this week. Small caps actually led slightly, with the Russell 2000 gaining about 3.9%. Now, last week we talked about how small caps were really skating on thin ice as the Russell 2000 was testing those former highs from 2018, 2020, but buyers stepped in right where they needed to. So it's encouraging to see that level acting as support. Now, taking a quick look at the sectors, all 11 sectors closed higher this week by more than 1.5%. Energy led, gaining more than 6%. Healthcare lagged, but it still rose about 1.7%. That's enough out of me. Let's welcome Matthew onto the show. All right. Welcome to the show, Matthew, and thank you for joining us today.
Hey, thank you for having me.
Yeah, of course. And, you're kind of the perfect guest to have on a show called Trendlines over Headlines. I mean, we started the Chart Report and this show out of the belief that the traditional financial media does a poor job of helping their viewers navigate the markets. And we think it's far better to listen to the markets via price action and rather than, fixating on the headlines. In fact, I think that's right from our mission statement verbatim. And without picking on anyone in particular, the media it often seems like the media is the last ones on the bus. They kill the best trends. And whether it's the magazine cover indicator or Jim Cramer, by the time it hits the headlines, it's usually too late. There's no more incremental buyers or sellers. So do you share that same frustration? Do you agree with any of that?
Yeah, I think when you say does a poor job, I think you're being overly kind. The word I would use probably isn't fit for a podcast. But no, I agree 100%. I mean, either they're on touting something that, I was buying 3 months ago and am now looking to short, or, I love that anytime there's a stock that's down 30% on earnings, there's somebody on fast money who just bought more of it like 7 days ago, and they go to them and ask them, whether they still like it or not. And kind of like, yeah, you know what? I'd rather hear from the guy who shorted it 7 days ago than the guy who bought more. And then, trying to explain why they're still a bag holder.
Yeah. So we're definitely on the same page there. But listen, my first question is actually from our mutual friend, Todd Sohn over at Strategas Research. He does a lot of work on ETFs. And I mentioned you were coming on the show, and he said, I know Matt uses charts to trade tactically. So I'd be curious to see how he uses charts and technicals to manage the funds.
Yeah, and it's not to manage the funds. It's more, I launch funds that I like to trade, basically. I mean, I'm a trader. I've traded my own account since the mid 80s. I pretty much exclusively use charts. I'm more of a counter trend guy. So, I'm looking more, buying dips and selling rips. My favorite pattern, courtesy of Gil Morales, is undercut and rally. I love undercut and rallies of previous lows, or undercuts and rallies of, moving averages. And I try to blend in, an understanding of kind of the macro environment. So I'm just not going to, buy something or short it in a vacuum. I'd like to have some sort of macro underpinnings about, why I think this area might be good to get into or good to short. And we write a daily newsletter where, I kind of put out what I'm looking at and why, what my watch list is. I mean, that changes a lot during the day. I mean, my entire watch list today just totally flipped, but that's the nature of the beast.
Yeah, and I like what you said there about how you look for, kind of undercutting a low. And that's something I really like too. Failed breakouts and failed breakdowns. I mean, sometimes it seems like those can be better moves than actual breakouts themselves, right? Those kind of fake out moves. Some people call them bull traps, bear traps, whatever you call them. Right?
I mean, what I've seen is just, and maybe it's just this market, but breakouts just are not working. And, and you see a lot of people on Twitter, still kind of following in Investors Business Daily breakout type of methodology and just getting savaged, and they're buying something when I'm probably shorting it. But yeah, I just from a, comfort standpoint, I like buying something when it's low versus, trying to chase a trend. I just feel more comfortable that way.
I love it. I love it. And I'll make sure to pass it on to Todd Sohn. But let's move on to the good stuff. I want to ask you about the Inverse Innovation ETF, SARK, which you launched back in November 2021. And it's essentially a bet against Cathie Wood. And I know you're not really involved with the ETF day-to-day anymore. It was acquired by AXS or Access not too long ago, but it's still your brainchild.
Oh, yeah.
It was the first ETF to provide inverse exposure to another ETF. Is that correct?
That is correct. We like doing first of its kind stuff.
But listen, the timing was actually pretty good. So often we see ETFs being launched at the wrong times, to meet demand, to bring a product to market for investors to use it as a vehicle to express a trade. And like I was saying earlier, usually by that time, it's too late. The trend is reaching the end of its life. But this timing was actually pretty good. I have this chart here, and this is ARK, but that red arrow points to when you guys launched your Inverse ARKK ETF, SARK. And it was pretty much downhill from there. Isn't that right?
Yeah, I'm kind of pissed we didn't get the top looking at this chart. But, and the problem is the people who are out there launching ETFs don't trade. So we specifically did SARK. I mean, there are a lot of reasons why we did SARK, but one of the reasons for the timing was, we started talking about this in June, I think, of 2021. ARK had topped out February 15th. It had been up 100 and something percent. As someone who trades, I understand reversion to the mean. I understand if something has a parabolic move like that, it's going to retrace it. And, the Fed hadn't come out and specifically said they were raising interest rates at that point, but it was pretty much understood that, we're probably going to go into a rising interest rate environment. And, understanding the stocks that ARK owns, I mean, they're all high duration stocks. I knew they'd get crushed in that environment. So, we knew the timing for something like that was probably going to be pretty good. The Fed hooked us up by pivoting on inflation pretty much either right before or right after we launched. And it was all downhill for her and uphill for us after that.
Yeah. And what made you want to, launch this ETF and bet against Cathie Wood in the first place?
And it wasn't Cathie Wood necessarily. It sort of. So, being a trader, I'm always looking, hey, I wish there was a product that did this. I wish there was a product that did that. And, historically, when I've been negative on the market, and, I'm an ETF guy, so I buy an Inverse SPY or an Inverse NASDAQ ETF. And, the problem is, number one, you need to buy triple levered to really get any bang for your buck. And number two, when you're shorting SPY or Qs, you're shorting Amazon, Microsoft, Apple, So you could do it for a couple of days, but that's not a good long-term proposition. If I think the market's going down, I'd rather short Teladoc, Roku, and all the crap that's in ARK. And then people will, well, why didn't you just create your own index? Well, now let's go to Cathie. In our opinion, their research is, let's say, suspect. Their risk management, again, I'll say suspect, and their trading, I will say, is atrocious. So that just adds alpha to the whole mix. So really, to me, it's a better way to express a negative view on the market. It's something you can hold on to for much longer than you can hold on to an inverse Qs or SPY position. I had some guy hit me up on LinkedIn, the other day saying, oh, if you hold on to it for 10 years, it won't beat the S&P. I'm like, I'm not telling you to hold on to it for 10 years.
Right. It's a trading vehicle.
I traded tactically, but you can hold on to it longer than you can hold on to an inverse Qs.
Yeah, and I think it's important to keep in mind too, kind of the environment when you guys launched it, right? And Cathie was literally being talked about in the media as the next Buffett. I forget which news source called her that, but
probably all.
Remember, right? You remember that was really the belief out there, and so. I mean, tell me if I got this wrong, but it seems like once you started seeing her not perform, not necessarily really tank, but once it wasn't catching up with the narrative of her being a superstar, that's when it kind of caught your eye. And of course, I'm sure filing for an ETF is a process, right?
Yeah.
Like you said, you can't just think of the idea and then tomorrow launch this ETF. I'm sure it's a multi-month process, yeah?
Well, yeah, I mean, normally it's 3 months, but when you're doing something first of its kind, it takes a lot longer. So we probably filed for this in June 2021. And, theoretically, we could have launched in September. We launched in, November. So it was a 5-month instead of a 3-month process. But, she caught my eye early on. Again, we talked about the financial media. I've been on Wall Street for a long time, and one of the things that's fairly obvious is Wall Street is unkind to people who are uneducated. So I'm a big believer that individuals need to educate themselves. But unfortunately, they do that by going on things like CNBC. So when CNBC brings up Cathie Wood and says, hey, this is the next Warren Buffett, and I know that that's totally and completely wrong and dangerous, that stuff just pisses me off. So that gets on my radar screen real quick.
Yeah, I mean, anytime I think you hear the words "the next Buffett," you should probably just run for the hills.
Probably.
Yeah, right. But I mean, you launched it around $30, and it pretty much never looked back. Is that correct?
So unfortunately for me, I had planned on buying some at the beginning, and then I was going to buy the dips and accumulate a position because we had a negative view on the market at that point. So it traded at $29.95, and then it never looked back. So I bought my initial shares and then never got any more. And then it got to a point where it's like I knew, Murphy's Law. The second I decide to buy more, it's going to tank on me. So I mean, now I trade it. I mean, now with this market, I'm not going to just buy it and hold on to it. I trade it. But back then, I wanted to hold the position. And again, I had some. I just didn't have as much as I wanted.
Yeah. Well, I mean, it's definitely struggled this year with that rebound in growth and tech stocks. They've been really strong so far year to date, but I think it's still beating the S&P 500 since inception. Last time I checked, it was up around 40%.
Yeah, it's got to be. I mean, it had a great year last year. So, the S&P's got a lot of catching up to do.
Yeah, I think it was up at its peak around 150%. But let me ask you, Matt, what would you say to critics who would say that you're betting against human innovation?
Yeah, like Cathie Wood, who said that's un-American, which and
did she actually comment that?
Oh yeah, she called me un-American. So I believe for any index, you should have a long and a short. You should be able to play at both sides. I am very, very agnostic between long and short. I think, the whole long only bias just messes people up. I think you've got to be willing to take the short side. And for any index we have out there, there is a long ETF and a short ETF. Cathie has come out multiple times and said she's the new NASDAQ. If she's the new NASDAQ, I mean, there are at least 3 ETFs that short the NASDAQ, and there are probably more than that. There's one that shorts her. So, I mean, it's a tool. I'm not saying you don't want to be innovative. Now, I would also question whether their portfolio is actually innovative. Some of those companies, when they launched, you could make an argument they were innovative. Are they still? I don't know. I'm a chart guy. I'm not a fundamental guy. I'll leave it to the other fundamental guys. But, is a Robinhood, is a Coinbase, is a Roku, are those innovative? Again, I'll throw that out there for discussion, but I would argue they probably aren't anymore.
No, I think those are very valid questions. But, you kind of answered this before, but I'll ask you again, why not just short ARK outright? Why do we need a vehicle like this? Is it somehow maybe less risk?
No. So, yes and no. I'm a huge believer that more tools are better, multiple ways. So you could buy puts on ARK if you want to. Buying puts has advantages, has disadvantages. You could short it. Advantages, disadvantages. One being you can't short in an IRA. Maybe you can't find borrow. I've got my main account is just legacy at Schwab. I'm too lazy to move it. Schwab is awful at finding borrow. I can't tell you how many times I've missed short trades on Coinbase because they can't find borrow for Coinbase, or I got guys on Interactive Brokers shorting it to their heart's content. So you can't always find borrow on stuff. So it's and some people are more comfortable using an inverse ETF than they are shorting. I'm fine shorting, but I'm an ETF guy. I'd rather buy an inverse ETF than short something if I have that option. So it's just providing another option for people.
Yeah, that makes sense to me. But let's move on to the Inverse Cramer ETF, SJIM. Now, when did you launch this one?
So this was launched actually 4 weeks ago today.
Oh, okay. So it's still fairly new. Now, to be fair, I should mention that you also have the long version, which is SJIM. But I think we all want to hear about the Inverse Cramer ETF, SJIM.
Probably.
So tell us a little bit more about the methodology there.
So the methodology is pretty simple. Everything Cramer says on Squawk on the Street, through tweets during the day, if I can discern his tweet, he sent some really weird ones. And on Mad Money, we will do the opposite. And so every day we're adding new positions, we're taking off old positions, and it is a long short portfolio. So if there are stocks that he likes, we're shorting them. And if there are stocks he doesn't like, we're going long.
But, he makes a lot of calls. So how do you decide which ideas to fade?
So we're pretty much taking everything. And so, there's a lot of turnover in the portfolio. We're not holding on to positions long. The only ones we're holding on to for a long time are kind of the legacy stuff. So like he's got a man crush on Jensen Huang at NVIDIA. So, we've held on to, we've had
NVIDIA. His dog NVIDIA?
What's that?
Dog. I'm pretty sure he named his dog NVIDIA.
He named his dog NVIDIA.
Oh, man.
And we've got a drinking game here, actually, which is why I'm usually wasted by 9:30. For every time he says Jensen, we have to take a drink. Try it once. Just try it once, because he'll say Jensen like 20 times before 9:30.
Oh, man. I don't think my liver could handle that.
Yeah. So, there's that. There's Meta. He's got a man crush on Zuckerberg. Lily is one that he's been on for a long time. So those ones we don't touch, but the lightning round stuff where people are calling in, we'll probably hold on to those for about a week until we have to cycle them out for a new name.
So that's another question for you is how do you decide when to get rid of the position, when to exit the position? Is it based on some sort of, once you guys are up 20% or how do you do it?
So we've got to exit positions every day that he's not on vacation because so like today we added 9 new positions. He had 6 on Mad Money last night, and then he had 3 this morning. So we're exiting the older ones that, again, are not the ones he keeps talking about. But I'm also looking at how much of a profit we have. So like yesterday we had to exit some positions, and GameStop and Oxy were newer ones, but we had big profits in both. So I just took the money and cut those to add in some of the new ones.
I see. But you're looking for decisive calls from him, right? Like if he just comments something that's kind of ambiguous, what do you do there?
We're looking for decisive calls, except on, some of the more controversial stuff. So for example, Deutsche Bank. He didn't say buy Deutsche Bank, but he said they're strong and they're going to be fine. So we took a smaller short position in Deutsche Bank. Just because, that could end up being another Bear Stearns call. So he's not saying buy Deutsche Bank, but he's saying Deutsche Bank isn't going to go under, which is probably the kiss of death.
So it sounds like you kind of position size based on his conviction too.
So we'll position size based on his conviction. We'll position size some based on volatility. Like, he's talking about some penny stock. It's not going to have the same position size like, a Procter & Gamble might. But yeah, NVIDIA and Meta are going to be larger positions than, some dude calling up the lightning round and asking about, Amgen or something.
And I kind of already know the answer to this next question, but I want you to tell us a little bit more about Cramer's reaction to the ETF, because I know he's made some public comments on it, but what stood out to you?
Yeah, so, when we filed for it, he sent out a tweet where he said, this is the only tweet I'll mention this. And of course, it wasn't. He mentioned it a lot. Again, I did both sides, but, on the filing, the media focused on the short side. And, buried on page 21, they're also doing a long. Now it's been radio silence. My guess is they've been told not to comment on it. And I've heard kind of through the grapevine, they're a little bit worried, which makes sense. We've only been out a month, but the SJIM from a performance standpoint is killing the LJIM, which, when you're bringing a guy on as like the oracle of the market, having an ETF that shorts his picks, that's up for the month when the market is up for the month, and is beating his long picks, it's not a great look. So, I think they're intentionally being quiet about it. I do poke him a little bit on Twitter. I don't think he reads his tweets, but
Are you not blocked yet?
What's that?
Has he blocked you yet?
He is not. What I think is, he doesn't read his tweets, and I think there are certain words that you don't use. So I replied to a tweet with something that, probably should have gotten me blocked. And then somebody else tweeted, Cramer should be sued. And that guy immediately got blocked. So I think like if you tweet back at him that he should be sued, you're going to get blocked. So I'm being somewhat careful to be sarcastic if I have a dig. And so far, so good.
Yeah, you definitely rattled him a bit, because I have a few tweets of his here. Here he says, Bed Bath and Beyond hanging in there. By writing that, does it make it an inverse Cramer sell? How's that going? And we can see how it's going right here. You got that arrow pointing to when he tweeted it. And
yeah,
it's been a rough go for Jimmy Chill.
Actually, make it a sell.
And, again, here, if I say GameStop if I say I like GameStop, does the inverse Cramer short GameStop? If I say it 25 times, is the inverse Cramer's biggest position? Should we ask the SEC? Very interesting there. And maybe not as bad here, but I think between around 25, it's at like 22.
GameStop may have been one of our best trades. He actually came out positive on GameStop a couple of days ago, so we shorted it. And I think we exited that trade with like a 10.5% gain.
Well, so that was one of my questions, is what were some of his worst calls recently that you guys faded? I mean, or maybe some of your best trades within there.
Yeah, I mean, what sticks out? GameStop sticks out. Oxy. So someone called him about Oxy and he said, that's Warren Buffett's favorite, not mine. So we went long that one. We made some money on that. We've had some good luck with Chat AI or Chat A3, Symbol AI. I forget what the name is. It's one of those AI companies. He's come out negative on that twice. And every time we've done pretty well with that. So, those are the ones that stick out since inception. Bitcoin. We caught the tail end of the Bitcoin run. Unfortunately, the fund wasn't up in January where he first made the Bitcoin call, because that would have been epic. We did catch the tail run of that, so that was good.
Very interesting. And, I have this chart here from my friend Arun Chopra. He has been covering the whole Cramer saga at length. I'm not sure if you follow him, Matt, but he is definitely worth a follow there.
Because send me his information offline. I would love to.
I will. But he has a great thread. I highly urge our viewers to go check it out. But here are his comments on oil. When oil was around negative, he said, oil is going to go to zero again, and of course took off. And then towards the peak says, buy the dip on oil stocks. Once it was already a trend, like I was saying earlier, there are no more incremental buyers at that point. It's become so obvious. So he has gotten a lot of things wrong recently, and so much so that it's almost suspicious. I mean, this guy is a veteran. He's got decades of market experience under his belt. So why is it that you think his calls have been so bad lately?
So, it's not lately. Remember Bear Stearns.
True.
I think they've consistently been so bad. The only reason he still is on is he's entertaining. And he probably has pictures of somebody. But yeah, I've heard the conspiracy theories. I don't believe them. I did have a weird experience with oil. Again, I trade my own account one day before we had the fund. I'm long a couple of oil stocks. I'm doing well. And he sent out a tweet saying, now's the time to buy oil stocks. Immediately, they start going down. Like, what's going on? And, they keep going down. I'm like, all right, I'm going to try something here. Sold my oil stocks, bought a 2X Inverse oil stock ETF, made a good amount of money on that. And after about an hour, things leveled off and I got out. I have no idea what happened. Maybe it was just a coincidence, but maybe there was someone out there who was shorting oil based on Cramer's positive oil tweet. I have no idea.
Yeah, I was going to ask you if you think there's anything nefarious going on there, because without getting too conspiratorial, I've heard theories that, maybe there are CEOs or insiders out there who are maybe compensating him for recommending these things to raise interest. If you're the Silicon Valley Bank president, things are about to hit the fan, you call up Jim Cramer and you say, I'll kick you back some if you recommend this thing. And again, total speculation here, so fair warning. But I've definitely heard those theories where
I've heard
recommends it, raises some interest for it, and sells into the bids and leaves the public with the bag, right?
Yeah, no, I've heard the theories as well. I can't imagine this guy would risk his reputation on that, but who knows? He does have the talent for getting things wrong. That is, it's impressive.
Like I said, impressive, suspiciously bad, but we'll leave the conspiracy theories aside. We got this great tweet. Elon Musk even kind of gave you guys a little hat tip there. The force is strong with Inverse Cramer.
Yeah, someone needs to give him our ticker symbol for his next.
Wouldn't that be great marketing?
Oh, yeah.
Well, before you go, I know your firm has a lot more to offer. than just SARK and SJIM. So what are some of the other ETFs or product offerings that you guys have at Tuttle Capital Management that you guys are excited about?
So we've got a bunch of tactical ETFs. So, the sub-advised strategies, those are run by, a firm called More Capital using a technology from a company called EdgeTech. So they're tactical in nature, very active, move in and out of markets. We have our SPAC and new issue ETF, which was the first actively managed SPAC ETF and maybe the only SPAC ETF standing. Right now, SPACs aren't a great area of the market to be in, but that's an area that's going to come back at some point. We've got a bunch of things on the drawing board. So, our interest is in, serving retail investors for the most part, providing tools. So, we've got a few more coming out in that regard. We have a couple we filed for. So we just filed for a 2X DBMF, which is a managed futures fund. So this will be the only kind of way to access managed futures with leverage. So we're pretty excited about that. Hopefully that'll be out within the next couple of months. And we also just filed for an emerging market ETF that excludes companies based on national security concerns. So you see like all those Chinese companies that are selling arms to Russia, those are companies that wouldn't be in our emerging market fund that may be in others. And again, we've got a bunch of stuff coming over the next couple of weeks that should be interesting. I mean, we plan on, at least 10 new products this year and probably a lot more.
Very cool. Well, I can't wait to see what you guys cook up next. And we'll make sure to include a link to your website in the description of this video so our viewers can go check it out further. But we got to wrap it up now. Thank you so much for coming on the show and hope to have you back sooner rather than later.
Yeah, anytime. Thank you for having me.
Of course. Have a great weekend.
You too.
Thank you guys for watching. If you enjoyed the show, be sure to click like and subscribe, and we'll see you again next week. Thanks.